animal spirits are just in full force right now. Peter, how long does that last?
Well, it's hard to say, Matt. It's lasted far longer than I certainly would have thought. The assumptions, I think, around earnings growth for this year and next year, and in fact, people are really looking into 2022 to justify their earning targets on the S&P 500 or whatever index you would like to point to, are pretty aggressive. And I think what's being lost here is this idea that stimulus, even when we get it, whether it's monetary policy stimulus or fiscal policy stimulus, acts by pulling forward future consumption and investment. And so the activity that's stimulated today by fiscal and monetary policy stimulus is activity that's lost in the future. And so to some extent, in order to believe that things are going to continue to improve, you have to sort of believe that you can have your cake and eat it too. And I'm just not sure that that's going to be what's in the cards. And moreover, this idea that immense earnings multiples, PE ratios, or whatever valuation ratio you'd like to look at, are justified by low rates doesn't necessarily hold water either, because it's lowering rates further that really is the stimulative effect of monetary policy. And we're at the zero bound pretty much across the curve. And I think with more fiscal stimulus coming, we see the impact on long yields. This morning, treasuries are being sold because I think the treasury market understands that more issuance is coming to fund these large deficits.